GM. GM. So, trade of the day. It's going to be kind of trade of the weekend. I think that first thing, Bitcoin has come up and retested this previous value area low and initially rejected it. And despite all the bullishness, I think the most likely thing is that we go down first, because going into the weekend, after people were really uncertain throughout the week, you have to remember this, we pumped on Monday, but since then, Tuesday, Wednesday, and Thursday were choppy, right? Longs did not get rewarded. They got bled out, chopped up. And so people started thinking, oh, reverse is happening. It's all going down. It's going to zero again. And then we had a blast out candle through that after the Bitcoin reserves and all the rumors and all that kind of stuff. For the weekend itself, and if you look at alts too, like everything is pumped on Friday, even the trash. And you see a lot of this stuff now is up again, right? You see this kind of stuff, taking the opportunity of the low liquidity, low volume weekend to move higher. And you'll see this across the market. Many of these coins are getting kind of relief rallies and rising up further based off of, some of these fucking absolutely brutal charts. And people chasing into alts, like meme coins, Doge taking out those previous highs. Bonk has risen up. SHIB still weak. WIF had grinded up. So this is a point at which, at least from what I'm used to seeing, the market in the near term, I think the direction of the market is up and to the right. I think the direction is going to go that way, right? But the path to get there, I don't think it's going to go straight up from here. And so when I look at this, touching that area is exactly where you'd expect to see initial resistance, and we did see resistance there. And that resistance comes in right at 66.9. And we rejected off that initially, and I think there can be a pullback here, because then when I zoom in and I look at the structure of this move, it seems a little bit like exhaustion. Rallied up, we had that kind of drop off and a bit of exhaustion into this move, where you might just see a kind of stair step lower and fill in the inefficiency and then go again next week or go again at some other point. That's obviously still pretty speculative, but to me it looks like a move that could very easily fill itself back in. And the invalidation of that would be closing strong through 66.9. Really, if you flip 66.9, then the target above is actually the value area high of this other one, and then of course your previous value area high. So you've got two areas to watch. You've got the bigger 4-month distribution with the value area high at 69.1, and then you've got this smaller consolidation the price would need to push through to become bullish again for a breakout, and that goes as high as 70.025. So when I zoom it back in, if it's able to flip 66.9, I think it moves to 69 and then to 70. Those would be the targets if it gets above there. And if it doesn't, you'd be looking at it to come back and fill in some of this. Maybe it comes back as far as the point of control from that previous distribution, or maybe it does something entirely different. I can draw, since this one's actually gone now, I can actually draw a value area across all of this, which I'll take from this first sell-off, because that's where I was originally drawing it from, and then the rest of that consolidation right up until it broke out. So before that breakout. So if it were to come back down, yeah, you could see it coming into this area here. Regardless, I don't know why that's shaded in. I think I had that shaded in. Anyway. So, regardless, the next direction of the market, I think, is probably more likely to bleed down a little bit, just as people have gotten themselves a bit too long going into a weekend. And the immediate invalidation of that would be a reclaiming 66.9 in continuation. So, for me, actually looking at shorts below 66.9, just on a day trade basis, or a swing trade couple day hold, back towards 65, makes sense. And then if it goes and breaks above 66.9, then you're looking at continuation to these higher levels. Which, by the way, with all the catalysts, with the strategic reserve stuff, with all that, would not be surprised if we saw that. You know, if ever there's going to be a time for kind of a runaway rally, it might be now. But I would lean on this being the start of one of these stair step, because this is exactly how they begin, right? When you see these moves up, and then they fall off, and then they have a sideways correction that's unable to show any strength. It usually just, if it drops, right, it has to drop. If it actually breaks to a new low, if you see Bitcoin closing below 66.2 close candle on the hourly, it probably does to go down and step down and fill all that. So that's what I'd be looking at. GM.